Hi everybody, it's Kia from Car Bookkeeping Specialist. Thank you for joining me once again. Today we're looking at how to calculate your income tax bill. I've got one really quick tip to share with you, and that is if you broadly save 25% of your income, of the revenue that comes in, then that should generally cover you for your income tax bill at the end of the year, because your income tax bill is based on 20% of your profits, not your income. And then they tend to ask you to pay ahead. So they'll ask you to pay half of the following year's bill in January and the rest of that in the July that's due to come as well. So it should hopefully cover you for that big payment that you'll get in January. Obviously, it doesn't work out like that all the time. It's not exact. You might be a little bit under, a little bit over, but generally that seems to work pretty well. So give it a go. Let me know if it works for you. But as always, I do recommend that you get to know your finances, understand your taxes, do these calculations probably on a quarterly basis, just so you're aware and know what to expect before that tax bill comes and you're prepared for that. Or get your bookkeeper or accountant to do it for you and just keep you up to date with how much money you need to be setting aside every so often. So we're going to jump straight into the example today, and we've done so many of these, we've looked at them so often that I'm not going to go into what are categories of taxable income or allowable expenses. For example, I've told you 100 times that there is the free download available. Go and get it. It's got all the details on there, or just watch the previous videos. We're just going to look at these summary figures. So assuming you've got income of £63,500, you've got total cost of £39,400, that means your profit is £24,100 income minus costs, and then you have to pay income tax on that 20%, which means you're paying £4,820. Is that correct? No, it's not correct, because what did we forget to include? We forgot to include our personal allowance. It's £24,100 minus your personal allowance, which is your tax-free allowance, £12,500 for the year, which leaves you with a taxable profit of £11,600. 20% of that is £2,320. So don't get confused when you're trying to work out those types of calculations. Don't forget your personal allowance. And one other allowance that you may be entitled to is, especially if you're a new business, you're a new startup, if you've got very low income and very low expenses, you've got expenses under £1,000, so the bit that you're deducting from your income is less than £1,000, you could also be applicable for a trading allowance, which is £1,000. So that's an additional deduction, very similar to a personal allowance. It's not £12,500, it's £1,000, but it's there. So you can claim that as well. But if you have trading expenses that are more than £1,000, then you're not really going to want to claim that. You're just going to want to stick with doing your expense deductions as well. That will work out better for you. So that's it. It's really that simple. I know you're going to find it super easy. If you have any questions, please do let me. Oh, and one more thing, I think I forgot to mention it in the previous videos, but when we're talking about income tax in general, that's a combination tax. So that includes your national insurance contributions as well, which we're going to be talking about in detail in the next video. That's pretty much it. So please remember to like, comment, share, subscribe, follow the page, etc. I hope you enjoyed the video. I hope you found it useful. Thank you so much, guys. See you next time. Bye.